What if I told you silver didn't just bounce today? It snapped back with force, not quietly, not slowly, but in a way that caught short sellers completely off guard. In just one sharp move, silver pushed back above $80 an ounce. Momentum exploded, and suddenly the same traders who were confident just days ago are now scrambling to cover. This is not a normal recovery. This is not random volatility. This is the kind of move that usually signals something bigger is happening under the surface, especially for anyone watching COMEX closely. If you trade silver, invest in silver, or even just track the metals market, you need to understand why today's move matters, because what happens next could surprise a lot of people. Before we go any further, if you follow silver, gold, or macro market moves like this, make sure you hit the like button and subscribe to the channel right now. It helps more than you think, and it tells the algorithm to show this video to other serious market watchers. This is Silver Shockwave, and we break down what the charts are doing and what the big players are not saying out loud. Now let's slow this down and really understand what just happened. Silver moving back above $80 isn't just a psychological level, it's a technical trigger. For weeks, silver was under pressure. Weak hands were shaken out, sentiment cooled, and short positions quietly piled up. Many traders started to believe silver had lost momentum, that the rally was over, and that lower prices were inevitable. That belief is exactly what fueled today's move. Because when too many traders lean the same way, the market loves to punish them. As silver started pushing higher, the first thing that kicked in wasn't excitement, it was fear. Short sellers saw price levels break that were supposed to hold. Stops started triggering, margin pressure increased. That forced buying is what we call short covering, and once it starts, it can move fast, very fast. And when short covering lines up with momentum buyers, the move doesn't just crawl, it jumps. Momentum traders don't care about last week's news. They don't care about opinions. They care about speed, volume, and structure. When silver reclaimed $80, algorithms flipped from sell to buy. Technical traders jumped in. Suddenly, volume surged and price accelerated. This is why the move felt violent instead of calm. Markets rarely give you neat, polite signals. They shock you first, then explain themselves later. What makes this even more important is where it happened. US traders watching COMEX know that this market isn't just about price, it's about positioning and pressure. COMEX silver has been sitting in a fragile balance. Open interest, delivery expectations, and speculative positioning have been building tension. Today's move adds stress to that system. When silver rises this fast, it doesn't just affect charts, it affects confidence. Shorts start asking how much risk they're really carrying. Longs start asking if this is the beginning of something larger. And here's the part most people miss. These kinds of moves don't happen when the market is comfortable. They happen when the market is wrong. If this rally were obvious, it would have happened earlier. Instead, it waited until sentiment cooled, until traders relaxed, until people stopped expecting fireworks. That's when silver tends to move. Now, does this mean silver is going straight up from here? No market moves in a straight line. Pullbacks are normal. Volatility is part of the game. But momentum shifts matter, and today's shift was not small. Reclaiming $80 changes how traders see risk. It forces recalculations. It forces repositioning. And repositioning creates volume, volatility, and opportunity. Think about the psychology here. Just days ago, people were talking about silver weakness. Now those same voices are suddenly quiet, or worse, confused. Confusion is fuel for volatility. When traders don't know what to believe, they react emotionally. Emotional markets move harder and faster than logical ones. This is also why silver often outperforms gold during momentum phases. Silver is thinner, more reactive, and more sensitive to flows. When buying shows up, it doesn't need permission, it runs. And today, that's exactly what we saw. For longer-term investors, this move sends a message. Demand didn't disappear, it was waiting. Industrial demand, investment demand, and speculative interest don't vanish overnight. They pause, they reset, then they return when price confirms strength. Momentum is a signal, not a guarantee, but ignoring it is dangerous. For traders, this is a reminder: never underestimate a crowded trade. When everyone agrees, the market looks for a way to break that agreement. Short covering rallies are some of the fastest moves you'll ever see. They usually start when confidence is highest on the wrong side. As we move forward, watch how silver behaves above this level. Does volume stay elevated? Do pullbacks get bought quickly? Does momentum cool or accelerate? These clues matter more than headlines. The market tells the story in real time if you know how to listen. This is exactly why we built Silver Shockwave. Not for hype, not for panic, but for understanding moments like this when silver sends a signal most people don't fully grasp until it is too late. If you're still watching right now, you're already ahead of the crowd. And I want to hear from you. Do you think this move is the start of a larger breakout, or just another sharp shakeout before more volatility? Drop your thoughts in the comments, because strong discussions help everyone see the market more clearly. And if you found this breakdown useful, share this video with someone who follows silver but might be confused by today's move. The more informed traders are, the better these conversations become. Stay sharp, stay patient, and stay ahead of the noise. This is Silver Shockwave, and we'll be watching the next move closely.